What is up everybody, and welcome to a brand new video. In this video today we will be teaching you simple and quick guide to daily bias. I believe over my few years of testing and back testing, forward testing the lot, I believe that this approach to daily bias is the easiest way to determine one intraday. Now, of course, like every other concept, there are times where this doesn't work, but for the most part, for me, this has about a 70 to 80% accuracy to it. So we will start off straight away and dive right into it without wasting any time. Now, let's say we have a trending market, okay? And then, like we did here, you can see all of this range, we've been trending lower, okay? In this area up here, we had a quarterly shift take place. If I'm not mistaken, I believe it was these highs here, right? So we had a quarterly shift take place and then started to move lower. Now, as we're moving lower, you have to remember there are major sell side liquidity points as we begin to move lower. How do we find these? Well, you go up a time frame, okay? Now, within this recent price leg on a monthly chart, you can see we have internal range fair value gap at a discount, okay? And we've taken out highs here and we're at all-time highs. So you can see we're in a very deep premium naturally, just because the price is at such a price, which sounds weird to say, but price is at such a price that we are in a premium overall. So looking at our current range, why this? Because this low took out sell side liquidity and this high took out some buy side liquidity, okay, above here and above here. So this would be our range. We're in a rich premium on the monthly chart in the whole trading period since Nasdaq has been trading, and in our recent range, okay? Keeping that in mind and our seasonal tendencies, we expect a quarterly shift. So we start to move lower, and I've been calling this lower in my mentorship for weeks now. Well, not weeks, since we started going lower. So about up here, when I saw this SMT divergence with ES, if I'm not mistaken, yep, these highs, you can see, higher high, lower high. Ever since I saw that, I was anticipating lower prices, and you can see we got a really nice run over the last week or so. Now, if you look on the monthly chart, you can see we have a monthly fair value gap here. Could we not say that is a major liquidity point? For me, that would be considered a major liquidity point, okay? So once we take out this sell side liquidity with this candle here, and then we print an inside day, such as this, okay? Now, what is an inside day? An inside day is where the daily candle didn't take out either the previous day high or the previous day low. As you can see, this level here is our monthly fair value gap and this sell side liquidity over here. Now, what happened after we took that sell side liquidity out? We printed an inside day where Monday's price action closed inside Friday's whole candle. So within this, we didn't take out buy side above the previous day high or sell side below the previous day low. Instead, we wicked about, consolidated, and closed within it. Now, this gives us a range to work within. And then I anticipate, with the logic and with the narrative behind everything, I can now anticipate, okay, we've taken out sell side liquidity, a key sell side liquidity, not all of these here. This is a key level to me. Why? Remember, we're referring to the higher time frame, okay? So we've hit a higher time frame level, traded in some key liquidity, and if you look at our range as well, this low to this high, you can see we are in a discount. Now, once we print an inside day, inside a discount with all the factors considered that I outlined, I want to see expansion to at least this daily high, okay? And then how do I know we will get an expansion further? Well, the logic tells me this was our last swing high, this swing high because we have a lower high to the left of it and a lower high to the right of it. And then we move lower below the sell side liquidity. This swing high, then we drop we get a big momentum move down from this high and then below the lows, of course. Now, measuring our range here from where the move started to the recent swing low, you can see that a premium lies above 50% here. So if a premium lies above 50% here and we have an inside day below old lows, we can consider this candle to provide us an open, low, high, close opportunity, right? Now, if you want to aim for this internal fair value gap, and I did take a trade on this, I took a winning trade in my Discord and on my personal accounts. I was trading this somewhere in here towards this daily high. Now, I would anticipate some more expansion inside here to at least 50% of this range. Because of all the factors included, that is why I am anticipating the pullback. Even though long term I still want to see this asset class go lower, all things considered, there's logic behind us getting a pullback now. We're also at the start of the week still, so it wouldn't surprise me if we do something like that. Now, even if we don't do that and we start to, for instance, consolidate around here, drop lower, consolidate, do things like this, even if we do that, it doesn't matter because I took my wins down here. When the logic appeared to me and when the market tipped its hand to me with this logic that I've already outlined, that's where I took my wins. So if we come up here and start to consolidate, that's fine for me because I am anticipating this thing to happen, okay? I'm anticipating open, I'm anticipating a low, and I'm anticipating a high, okay? So this would be our open, our low down here, high, and then I'll close around here. Now, all with that considered, okay, we can go into the next day predicting that to happen. So let's drop down into the hourly chart. You can see we have our inside day here. Now, what happens here? We have our inside day prints. We then rebalance this imbalance, okay? Notice how we completely fill the imbalance and then move higher. We leave it, tap it one last time, and then run. Now, this is where I entered the setup around this 9 a.m. expansion candle on the 5-minute chart. I bought inside a breaker, anticipating the expansion upwards towards this high. Now, if I put that back, that's our daily fair value gap in a discount up there. If we can keep trading upwards and then take the liquidity, what does this look like? This to me is a classic buy day because why? We have an open, we have a low, we have continuation in New York, and then we have a high and then a close, okay? Open, low, high, close. Remember, if we're anticipating this pullback, then price should present itself like we did today, exactly like we did today. Open, low, high, close. Okay, it's no different. It's no different than if we're anticipating expansion downwards. Why would we be anticipating expansion downwards in here? Well, because if you take our range again, a high that took liquidity, a low that took liquidity, you can see, I'm using this low for reference, you can see we came into a premium. Remember, this is our range, here to here. Dropped down, came into a short-term premium, ran lower. Okay, we rejected, if I get rid of all of this extra stuff so we can focus on where I'm currently doing the teaching, you can see we rejected this premium here. Rejected with a strong close below this candle's body. Okay, open, high, low, close. Why can we be anticipating this to happen here? Well, seasonality is bearish. We have an SMT at the highs. We're anticipating the seasonality aspect of the quarterly shift. We are trading from a premium of the range, and we have just printed our order block. Open, high, low, close. Next candle, open, high, low, indecisive candle. That's fine. Maybe you took a loss in here, right? But you took a win here, so it doesn't matter. Next candle, move on. Open, high, low, close. Next candle, open, high, low, close. Next candle, open, high, low, close. Into major liquidity. Let the market tip its hand to you again. Inside day, we don't take previous day high or previous day low. Notice inside here, as we're bearish, we're constantly taking the previous day low. And again, and again, and again. Inside day. Okay? And look how far we've come. Look how far we've come without taking previous day high. All of this dropping here, which is about a week. 7 days, okay? We print an inside day. And we've been going lower for about 7 days. Can we not anticipate a retracement now? To where? Well, this would be our range. Above 50% is where we want to be looking for shorts, right? So that is where you would be looking to go short. Open, low, high, close. Same here. Open, low, high, close. And I anticipate the next day to do the exact same thing. Okay, so that is today's teaching. I hope you apply this properly. And I hope you understand the logic behind trading the daily range and the logic behind framing your trade setups every day, framing your bias every day. There's required logic which needs to be laid out beforehand, okay? You must be able to tell a story behind your trades. You must be able to tell me or tell whoever, tell your journal why, when, and how, especially with emphasis on the why part. Why should the next candle be bullish, or why should the next candle be bearish? Why are you anticipating that? What is the market tipping its hand to tell you that? Like, what is happening within the market for you to decipher, okay, this should be a down day, or okay, this should be an up day, okay? That is what I'm trying to drill in with this teaching. If you did enjoy this video, please do drop a like and drop a comment. Head over to my Twitter and my Telegram. I'm always active over there, constantly posting teachings and outlooks and things like that. So please do head over there and drop a like, subscribe. I'll catch you in the next one. Thank you as always for watching.